Hey everyone, and welcome to This Explainer. We're jumping right in today because we are unpacking a really fascinating financial reality, one that most people honestly just never see until it's way too late. There's this specific number out there, a hidden financial threshold, and when you cross it, something profound shifts. It doesn't just bump up a spreadsheet, it literally rewires your nervous system. Suddenly, an unexpected car repair doesn't ruin your entire week. Those calls from unknown numbers, they stop feeling like a threat. And you know that Sunday night anxiety that's kind of just followed you for years? It shows up less and less until one day, it just vanishes. We're going to explore exactly what that number is, how it cures that background hum of anxiety, and how you can actually reach it.
So let's talk about that universal feeling for a second. Before we reveal the exact number, we've got to look at what's really driving that financial stress. Most of us just assume it's simply about not having enough cash on hand. But you know what? Financial stress isn't really about scarcity, it's actually about uncertainty. It's the sheer, exhausting weight of not knowing if you're going to be okay if things go sideways. That gap between where you are right now and where you need to be, that creates a constant background noise in your brain. It's not always loud or super dramatic. It's just a constant hum, kind of like a refrigerator you've stopped actively noticing, but it literally never stops running. And look, if you think just earning a bigger paycheck is going to turn off that hum, the data tells a totally different story. Research from the American Psychological Association consistently points out that financial stress is the #1 stressor for Americans across basically every demographic. It beats out health, relationships, work, you name it. But here's the crazy part. It doesn't stop even at really high income levels. Folks pulling in $150,000 or even $200,000 a year still report significant financial stress. Why? Because income alone doesn't actually solve the uncertainty problem. Only assets do.
Okay, so what is the exact amount of assets you need to finally turn off that hum? It's exactly $750,000. Not $1 million, not $2 million, not some impossibly massive fortune that feels like it belongs to a completely different species of human being. Just $750,000 in invested assets. This is the specific threshold where the psychological uncertainty of your daily life really starts to meaningfully resolve. And it has nothing to do with buying luxury cars or living some extravagant lifestyle. It's about something much quieter and honestly a whole lot more powerful.
To really get why this specific number works so well, we've got to look at the mechanics behind it. This whole concept is built on something called the 4% rule. The 4% rule is this classic, widely accepted benchmark in personal finance. Basically, it says that if you have a diversified portfolio of investments, you can safely withdraw 4% of it every single year indefinitely without ever depleting your principal amount. Your money is literally out there making enough money to sustain those withdrawals all on its own.
Let's break this math down into your tangible, daily reality. At $750,000 invested, a 4% withdrawal rate gives you exactly $30,000 a year. Divide that by 12, and boom, you got $2,500 a month. Think about that. This is permanent, unearned, flowing monthly cash. Without you lifting a finger for it, without you trading your precious time for it, without needing anything from a boss, a client, or anyone else to make it happen. Now, we all know $2,500 a month isn't exactly funding a private jet and daily caviar habit, but that completely misses the point here. Having a guaranteed, ironclad baseline of $2,500 a month totally changes the psychological architecture of how you make decisions. It means that even if the worst happens, say your industry collapses, your business goes under, or you unexpectedly lose your job, you still have a baseline of cash rolling in while you figure things out. You don't have to panic, you have options.
Let me paint a picture of what this actually looks like in the real world. Imagine two 41-year-olds. They both make $95,000 a year in a solid career and both consider themselves super financially responsible. Person one has $95,000 in savings and investments, so about 1 year of income saved up. They fund the 401k, they've got an emergency fund. By all normal standards, they're doing great. But person two, same income, same career, but they started investing way earlier and a lot more aggressively. They have $750,000 in investments. So the ultimate test is putting these two people under extreme pressure. Imagine what happens when they both get called into the manager's office on a random Tuesday. They're told their positions are being restructured and they have exactly 60 days to pack up their desks. The exact same unexpected, scary crisis hits both of them at the exact same moment. Person one goes home in an absolute cold sweat. They're scrambling, running the math over and over, realizing their $95K gives them maybe 8 months of runway if they cut out literally everything. The clock is ticking so loudly. They're frantically blasting out resumes, and they end up taking the very first offer that comes along, a lateral move that doesn't advance their career or their pay, just because they can't afford the risk of running dry. But then look at person two. Person two goes home and feels something totally different. Calm.
Sure, it's annoying, but that $750K is generating $2,500 a month while they sleep. They have incredible leverage now. They can comfortably take 3 months to find the absolute perfect next role, then negotiate from a place of genuine security, not desperation. They can easily walk away from a bad offer because they know the right one is worth waiting for.
And this right here brilliantly illustrates the core danger to long-term wealth. When you don't have that threshold of calm, risk feels existential. Every single financial choice carries this terrifying weight. When a potential downside feels catastrophic, you end up making deeply conservative choices. You don't ask for the raise. You definitely don't start that side business. You don't invest aggressively. When risk feels like a threat to your actual survival, you play not to lose instead of playing to win. And let me tell you, playing not to lose is the absolute slowest path to building wealth.
A small savings account just breeds fear. But crossing that $750,000 threshold, it suddenly makes those downside scenarios totally survivable. A risky business opportunity fails, you're okay. You negotiate aggressively and the deal falls through, you're okay. The stock market tanks 30%, you don't panic sell at the absolute bottom because you've got the psychological stability to just wait out the recovery. You shift your entire financial life from playing defense to playing offense.
This shift is honestly worth way more than any specific investment return because it fundamentally upgrades the quality of every decision you make. Behavioral economists have actually proven this. They found that simply having a significant financial cushion makes you a calmer person. It lifts the emotional fog that clouds your judgment. You aren't suddenly a financial genius. You're just making better choices because your brain isn't trapped in fight or flight mode. And over time, those high-quality, calm decisions compound right alongside your money.
Now, right about now, you might be thinking, okay, this all sounds absolutely fantastic, but $750,000? That's for someone else, someone with a massive salary, a huge trust fund, or someone who got incredibly lucky. We have to address that assumption head on because it's the exact limiting belief that keeps so many people trapped in that background hum of anxiety.
When we strip away all the hype and just look at the math, reaching this number is incredibly predictable. If you're 25 years old right now and you invest $800 a month into a basic index fund returning a historical average of 8%, you hit that $750,000 mark by age 55. Start at 30, it's $1,100 a month. Start at 35, it's $1,650 a month. This requires zero luck, no crypto miracles, no picking the next big tech stock. It is literally just consistent contributions to a diversified index fund over a long time horizon.
So if the math always works, why on earth does almost everyone miss the target? Well, it comes down to a few specific behavioral traps. First, most people never make a committed decision to hit a specific number. They just save whatever happens to be left over. Second, they let lifestyle inflation eat up every single raise, upgrading the car instead of upgrading the portfolio. Third, they leave massive amounts of cash rotting away in low-yield savings accounts. And most tragically, they completely underestimate the power of time. They constantly think they have more of it than they do until they wake up at 45 and realize the math just got a whole lot harder. But here's a secret that hardly anyone talks about. The actual journey to building this wealth, it changes you. The sheer discipline it takes to delay gratification consistently over decades fundamentally rewires your character. You become the kind of person who can ignore short-term noise and focus purely on long-term signals. You become patient, strategic, and resilient. By the time you actually hit $750,000, you aren't just someone with a lot of money. The journey has built you into the exact kind of person who actually has the wisdom to keep it and use it right. So I really want you to ask yourself, which version of your life do you actually want? Try to viscerally compare them in your head right now. There's the current version, where that background hum of Sunday anxiety never really leaves, where every unexpected expense is a full-blown emergency and you're incredibly vulnerable to whatever your boss decides. Or there's the future version, where the hum is completely gone, or a surprise bill is just a slight inconvenience, where you make career choices based on what you love rather than what you fear, and where you can be radically generous because your baseline is permanently locked in. The distance between those two lives is not a winning lottery ticket. It's shockingly simple. $800 a month, an 8% average return, 30 years. That's the entire formula. The gap between financial anxiety and absolute freedom is literally just a series of consistent monthly decisions. The math isn't complicated at all. What's complicated is having the discipline to make the decision and then not reverse it the second something shiny and immediately satisfying catches your eye. The threshold of calm is out there, just sitting there waiting for you. It's not some wild fantasy. It's mathematical certainty combined with behavioral discipline. So the real question isn't whether $750,000 can change your life. We know it does. The question is, will you make the committed decision today?
Will you stop waiting for a miracle and start letting time do what only time can do? Take that first step today and start building your very own threshold of calm.